Joining us from ICICI Direct. Dharmesh, good morning. Thank you so much for chatting with us. Just want to start by getting your view on the markets. How should one navigate this turbulent, volatile phase?
Yeah. Good morning. Yeah, definitely. I think so. The market seems to be taking a pause after the almost 500 points rally in the Nifty. We believe, I think so, going forward, 9,000 to 8,800 has been a very strong base formation where we have seen a lot of consolidation for the month of May. Maybe possibility 2-3 days breather cannot be ruled out after a sharp move from 9,000 to 9,500. We believe eventually market should be heading towards 9,900 in the coming days. I would say in the month of June. We will see the market heading towards 9,900, which is again a 50% retracement of this fall from 12,000 to 7,500. So more likely, I think so. We are trading with a very positive bias, and maybe some bit of a breather cannot be ruled out. But we believe any dip towards 9,200 to 9,300 should be looked as a buying opportunity for a target of 9,900. But yeah, definitely some bit of a volatility will definitely be there on the back of global cues. But if you notice one thing, we have been following the US market very closely. There's a strong correlation between the India and the US. US market has already retraced 61% and we are almost near the 38%. We believe, I think so, this catch-up exercise in Indian market should get followed in the coming days, where we'll be heading towards 50% retracement, which is around 9,900.
Right. Hi, Dharmesh. Good morning. Varun also joining in. That's an interesting observation because the banks did really well in the first couple days, and that's when the US banks like JP and Citi were also up nearly 7-8%. And then just yesterday you had them all falling around 4%, and then today you're seeing weakness in our large private banks as well. So it's really mimicking the US markets. But I was taking a look at your most recent report, and especially your picks, right? Britannia, Sanofi, L&T Infotech, Syngene, Lal's, Pat Labs. So I want to understand, apart from the relative strength, what are some of the other key indicators in the charts that has led you to take these picks? And from these 7, which would be your 3 favorite?
Okay, too difficult to predict the top 3, but yeah, definitely if you look at our report, I think so. There is always a good saying that, and market, there is a wisdom always that there is always an opportunity in always adversity, and to find the stocks in such an unfavorable, uncertain market, it's very difficult and it's very challenging. And people generally makes mistake to buy the stocks which have seen a good correction and the cheap valuation, and they make the mistake and the stock get corrected for a long time. Now, what we did in the analysis in our report is that if you look at the history of the market, there have been 3 major falls in the market in 1997, 2000, 2008. Most of the time, what is observed we have that whenever market corrects more than 40%, after correction, market requires some bit of a bottoming formation. When we say bottoming formation, it takes 6 to 9 months for bottoming formation. And in this bottom formation, there are certain stocks or certain sectors, I would say, which likely to outperform even in this correction. If you go back to the history of 2000, Infosys, Wipro, 98, classic example, they have been outperformers even in that fall. 2000 was a classic. 2003 was a classic example for Larsen, SKF Bearing, Eicher Motors, and 2008 was a classic example for Maruti, or you can say something Honda, Lupin. They have been into the bottoming formation. We believe, I think so, history should repeat itself. Even in this current fall, we see the sectors like pharma, IT, chemicals, and insurance have been clearly relatively outperforming the market. We believe this could be the next leg of whenever we see a bottoming formation getting over for the market in the coming 6 to 9 months. We will see definitely, I think so, these are the sectors which should lead the rally. And when we talk for our technical indicators, we believe, I think so, 3 indicators has been the most important in technicals. One is price structure. When we talk for price structure, I think so, we believe in faster retracement. When we say faster retracement, is that the fall which has begun from Jan to March has seen a faster time retracement. So if you look at most of these pharma companies, they have seen a faster retracement of their fall. So it's clearly showing a structural turnaround. Pharma is the one space which we do like. Apart from pharma, we do like relative strength index. Again, when we talk for relative strength index, it's a set of stocks which have been resilient even in this current fall, and they have been clearly outperforming the market. Apart from that, again, a Dow theory, we believe in the Dow theory, where Dow theory again says that trend is your friend, and you should look at for the stocks which are making higher high, higher lows, not on the shorter degree. I am not talking for daily and weekly, but definitely from the quarterly and the yearly perspective. So this again been giving us a confidence that possibility chemicals, MNC pharmas, IT, and insurance are more likely to see a clearly outperformance. I would say a double-digit return in the coming years down the line. So one should be focusing more to these stocks where, as you asked me for my top picks, I think so Britannia remains to be a top pick. Britannia, Sanofi, as well as Dr. Lal Path remains to be a top pick among the all seven.
Taking a look at your top bets, most of them are from the broader markets, but it's really Britannia that stands out for me. Firstly, if you could talk to us about what makes Britannia an attractive bet at the current juncture, and also do you believe right now is the time to perhaps look at some of these mid and small cap names vis-a-vis the larger caps?
I think so. We should be focusing more to the known names first thing, and I think so. The clear is I think so. We do give importance to fundamentals also, where the balance sheet has been very strong and there's decent management pedigree. I think so. These things also do come in our filters when we do go for any recommendations. Yeah, coming to Britannia, I think so. Britannia has registered a falling channel breakout. It has registered. If you join the highs of Britannia, it has been clearly showing a breakout, and apart from breakout, it has also registered a faster retracement of a fall. So clearly a faster retracement, as I said, is something
Well, thank you so much for joining us this morning, Dharmesh. It was a real pleasure chatting with you, and we look forward to doing that sometime again in the near future.